Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Avis Budget Group, and trust me, there's more under the hood than just rental cars, maybe something about a financial vehicle instead. We're going to break down how Avis Budget is financing its fleet, what kind of debt they're taking on, and what it all means for the company's future. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. So what's this report all about? Basically, Avis Budget Group filed what's called an 8K form with the Securities and Exchange Commission, or SEC. This is like a quick update that companies have to give investors when something important happens. In this case, it's about a new financial deal they made. The big news here is that one of Avis Budget's smaller companies, Avis Budget Rental Car Funding AHOP LLC, which we will call ABRCF from now on, got some new asset-backed securities, or ABS. Think of these securities as loans that are backed by something the company owns, in this case their rental cars. ABRCF issued $70.36 come due in either 3 or 5 years. These securities are broken down into different classes, kind of like different levels of risk and return. There are Class A, B, C, and D notes, each with a different interest rate. For example, there's about $999 million in Class A notes with an interest rate of 4.80%. Then there are other classes with rates going all the way up to 7.84%. Basically, the higher the rate, the higher the risk for the investor. Also, ABRCF issued about $15.6 million in Class R notes with an interest rate of 9.795%. These Class R notes are like the last in line to get paid if something goes wrong. They're subordinated, meaning they only get money after the other classes are paid. Dollars about $99 million in similar Series 2025 to Class R notes with an interest rate of 9.795%. These Class R notes are like different false R notes with an interest rate of 9.79 to get paid if something goes wrong. They're subordinated, meaning they only get money after the other classes are paid. The Class R notes are held by another Avis Budget company, Aesop Leasing LP. Why do this? It's about following some US rules that make sure companies keep some of the risk when they sell these kinds of securities. They have to hold on to some of the riskiest parts of the deal. To make all this happen, ABRCF has agreements with the Bank of New York Mellon Trust Company. They act as the trustee, basically the person in charge of making sure everyone follows the rules. There's one agreement for the 2025-2 series. These agreements spell out all the details of how the securities work. Now, where does the money come from to pay back these securities? Well, they're secured by the rental cars themselves. That means if ABRCF can't pay, the investors can take the cars. It also includes other related assets. This section is basically saying that the information we just talked about is also relevant to another part of the report. This other part deals with creating a direct financial obligation, which is just a fancy way of saying taking on debt. Here you can find the legal documents that spell out all the details of these financial deals. These are called exhibits. And finally, this is where someone at Avis Budget Group signs off on the report, saying it's accurate to the best of their knowledge. Or what does all this mean for Avis Budget Group? Well, on the one hand, they're getting a lot of money, almost $750 million. That's a good thing. They can use it to buy more cars, expand their business, or pay off other debts. But on the other hand, they're also taking on a lot of debt. They're going to have to pay interest on these securities for the next 3 to 5 years. That could put a strain on their finances if things don't go as planned. The interest rates on these securities ranging from 4.80% to almost 8% aren't super high, but they're not super low either. It suggests that investors see some risk in lending money to Avis Budget. The fact that they're using their rental cars as collateral means that if Avis Budget has trouble paying, investors could end up taking those cars, which could hurt the company's ability to do business. One thing that stands out is the Class R notes. These are the riskiest ones, and Avis Budget is keeping them within the company. This is partly because of regulations, but it also shows that they're confident enough in their business to take on some of the risk themselves. Now, looking at these results more broadly, this is a fairly common way for car rental companies to finance their fleets, but it always carries some risk. The car rental business can be affected by things like the economy, travel trends, and even gas prices. If any of those things take a turn for the worse, Avis Budget could have trouble paying back these securities. Overall, this report shows that Avis Budget is making some big financial moves. They're taking on debt to grow their business, but they're also exposing themselves to some risks. Whether this will pay off in the long run depends on how well they manage their business and how the economy performs. Alright, that's our breakdown of Avis Budget's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.